So in this video, you'll learn a moving average trading strategy that works. And it's not a moving average crossover strategy, right? I think there is enough of that on the internet, right? And instead, what I'm going to teach you, or rather what you'll learn, is a moving average strategy that teach you how to go long on a pullback. So this means that you're trying to buy low and sell high. Okay, and I apply this on the forex and futures market. It works well for me, but I've also seen traders, using this similar strategy in the options and the stock markets. So to give you a general idea, how it works is that first and foremost, what you'll do is you'll identify an uptrend. Okay, and this strategy seeks to take advantage on the pullback of the existing uptrend. So this means you're trying to get long on the pullback, and I will show you shortly on how I go about achieving this. So with that said, right, let me lay out the criteria that I look for when I trade this moving average trading strategy. First and foremost, right, you want to define the long-term trend. I do this by using the 200 period moving average. So very simple is that if the price is above the 200 period moving average, I will look to long only. Okay, you may want to write this down on a piece of paper. Second thing is I will define the area of value in the existing trend. So what I like to use is the 50 period moving average. Now at this point in time, I know, right, some of you might be thinking, hey Rainer, why do you use the 50 period moving average? Why not the 49, the 51, etc.? Here's the thing, right? The area of value, the keyword is an area. So it does not really matter whether you use the 55 period moving average, the 45 or whatsoever. It's an area. You're not dealing with a specific line. Right? The reason I use 50 because many traders look at this moving average, it tends to become a self-fulfilling prophecy. So I use the 50 period moving average. Right? The second reason is that when you use a 50 period moving average, right, you are able to identify the swings in a trend easily. Right? If you use the 10 period of the 20 period moving average, chances are those type of trends are too strong, right? And you would seldom see, or rather it would be difficult to actually identify the swings in such a strong trend. So when you use the 50 period moving average, it's much easier to identify the swing in the trend, right? The swing meaning, let me explain what is the swing, right? So in the trend, right, this is what I mean, the pullback, right? The swing, the pullback. It's much easier to actually, identify this part of the trend compared to if you are using a short-term moving average, right, trading a stronger trend, right? The pullback sometimes is very shallow, very slight, and then continue higher, very slight, and continue higher. So it's very difficult to trade the pullback when the trend is strong. So this is why I use the 50 period moving average. Third thing, right, I'll talk about the entries, right, how I look to enter this particular trading setup. I want to share with you a couple of things to look for when we are discussing about entry, but the general idea is that you want to let the market reverse in your favor before you enter the trade. Then I'll share with you how to put your stop loss, right, so you don't get stopped out of your trade too early, right? Traders tend to get stopped out of the trade and then to see the market continue back in their favor. So I want to share with you a trick, right, that you can use, right, so that doesn't happen to you. And finally, for targets, right, it really depends on whether you're trying to capture a swing in the trade or whether you want to ride the long-term trend. So I'll share with you two options that you can apply as well to set as your profit potential or target, if you want to call it. Okay, so now back to the this screen is the charts over here. So let me walk you through what you have learned, right? So first and foremost, again, how do I define the long-term trend? Is this black line over here? This is the 200 period moving average. The price is above it, so I look to long only. Second thing, where is the area of value? I use the 50 period moving average, which is this line over here, this blue line, right? You can see that the price, respecting it, right, bounced once, twice, and it came back here a third time again. So at this point, right, I'm looking for an entry because clearly this market respects the 50 period moving average, right? This is the area of value, right? This area over here that I've shaded it. So the entry. So what do I look for in the entry? Actually, it's very simple. You can look for simply a higher close in your intended direction, like this candle over here. Okay, that's the most straightforward and simple approach. But if you ask me, right, the best kind of trading setup is where you get a strong price rejection. So maybe the price could come into this level and then it trades lower only to get rejected and close near the highs somewhere here. If you get this type of strong price rejection, right, you have a better odds of the trade working out. So usually it can be in the form of a strong bullish hammer, bullish engulfing pattern and stuff like that. So usually the stronger the price rejection, right, the greater the chance the market would, reverse back towards the upside. So that is for entries. What about stop loss, all right? So stop loss, right, I would say, right, be careful of just putting your stop loss just below the lows, because it can get triggered very easily. So what I like to do is to give it some buffer, right? If you identify the swing low, give it some buffer and just put it a distance away from this swing low over here. Okay, it gives your trade more room to breathe, right? And you don't get stopped out, prematurely. Right? If you want to learn more, go and search for one of my video called the how to set a stop loss correctly so you don't get stopped out unnecessarily. Something along that lines, right? It's on YouTube, right? And I go into more details over here. Okay, so with that said, that is for your entry, your stop loss. And what about target? So for target, right, firstly, if you want to take a swing in the market, right, so what is a swing again? So in the uptrend, right, if you want to take a swing is simply, going long on the pullback and then capturing this move over here. Just one move in the market, right? Whereas a trend following or a position trader, they'll try to capture the entire move, right, and only exit when the market shows signs of reversal. So you have to know which approach you're trying to apply, and then use the right technique for the right goals you have. So for example, let's say you're trying to capture a swing in this market. What you want to do is to identify areas or level where there will be potential selling pressure coming in. So over here, you would expect selling pressure to come in because this is a swing high, this is an area of resistance. So it makes sense, right, to set your target profits, right, just before this area. Why don't you want to set it above this area? Right, it's quite simple, because why do you want to fight through this obstacle to get to this level, right? This is where sellers could potentially come in. By putting your target over here, you're making yourself a great disservice, right, by trying to punch through this a wall, to speak, right? So you want to set your target, right, just before this area, let's say somewhere here, so you have a better chance of getting your order filled, right? So this is for swing trading. Now, what about trend following? What if you want to ride the long-term trend? How can you go about it, right? So one approach again to do is to reference from this 50 period moving average. This means that you would only exit the trade if this market closes below the 50 period moving average. So you can see that for this instance, right, your swing trade would have gotten you out of the trade, whereas your trend following trade, right, would still be in the move. So for trend following trade, right, you would only exit if the market, let's say, comes down and finally closes below this 50 period moving average. Only then you exit the trade. So these are a couple of techniques that you can use to so-called manage your trade, right? Whether it's a swing trade or a trend following trade. Okay. So just one more example to hit the points that I've shared with you. And obviously the examples that I shared, it's a cherry pick. I don't deny it, right? And the reason I purposely cherry pick this chart is because it's much easier for me to illustrate my point. But bear in mind, there will be losing trades, right? This isn't the holy grail. There will be losing trades, right? Don't think that it's 100%, right? There will be losing trades. Be prepared for it. And if you want to trade this strategy, I suggest you demo trade it or forward trade it in the markets first before try to risk any money on the line, because there will be losing trades, right? So this is one big disclaimer that I want to put out. So this is the China A50 market. Again, same thing, right? The price is above this 200 period moving average, so you look to long only. Then I define the area of value, which is the 50 period moving average. Okay, so you can see that it tested once. Let me use this pen tool. Tested once over here. The market traded higher, came back. Notice that it didn't touch the 50 period moving average, but I consider this a second test as well. Why? Because I said it's an area of value, an area. I did not say the line of value. So I treat this as an area. So the market could actually, trade just before this 50 period moving average, or like this, you could trade slightly beyond it as well. This is an area, right? An area, right? So one test, two tests, and I typically look to go long on the third test, which is this one over here, where you notice the market retrace, right? And you have this somewhat of a bullish engulfing pattern, market close higher, and this will be an entry signal to go long. Again, stop loss, I recommend setting a buffer below this low, let's say somewhere here. For those of you who are familiar with the average true range indicator, you can set it 1 ATR below this low. Again, if you do not know how to do it, go and check my stop loss video. I explain it. Okay, as for targets, right, look, right, for swing trade, this is a level that, potential selling pressure could come in, right? So you will may want to take profits off at this level. For trend following trade, you could just simply trail it with the 50 period moving average, right? So for this one over here, right, you may or may not get stopped out, right, depending how strict you follow your trailing stop, whether it's going to be the moment the candle closes below the 50 MA or whether it's the second candle that closes below the 50 MA. Okay, so these are things that you have to consider when you are trading this moving average trading strategy. So with that said, right, I want to do a recap so you kind of, encapsulate what you have learned so far. Okay, so a recap, right? First and foremost, I want to identify the long-term trend. So if you're long, right, if the market is above the 200 MA, I look to long only, and vice versa for short. To define the area of value, I use the 50 period moving average because of the two reasons I've shared with you earlier. Third thing is the entry, right? A simple higher close in an uptrend would warrant an entry, right? But for those of you who know candlestick patterns, again, candlestick patterns, if you're not sure, I have a free candlestick trading course on my YouTube. Go and check it out as well. You can trade a candlestick pattern like the hammer or the engulfing patterns. Then I talk about stop loss as well, how to set your stop loss. Usually give it a bit of buffer beyond the swing low or swing high if you are short. And then for targets, right, depending whether you are trying to capture a swing or to ride the trend of the market. Okay, so this is what you've learned so far in this moving average trading strategy.